You've probably been told your entire life by friends, family, school, and everyone else that buying a home is something to strive for. Owning a home is the Canadian dream, but this is slowly changing, with more and more people deciding to rent for the long term, whether that's due to lifestyle choices or the inability to afford a home in their desired area. And if you're watching this video, you've likely considered many of the same things. But you aren't quite convinced, and that's why you're here to figure that out. Did you know that buying a home today requires more income than ever before in history? Yep, you heard that. Right on top of that, fewer people are applying for mortgages than we've seen in the last nearly 30 years, and the shortage of available homes isn't getting any better. So this brings up a big question. With the way prices are soaring, is it smarter to buy a house or just stick with renting? Which one is going to be the better financial decision in the long run? Well, we're about to dive deep into this and compare the real costs of owning versus renting in Canada. And let me tell you, the results might just shock you, and they definitely challenge a lot of what we've been told about real estate. And just before we jump into it, if you like this kind of content, a quick like or subscribe would mean the world. It really helps out the channel and allows me to take the time to make more educational videos for you just like this one, okay? Let's break this down. A lot of us have grown up hearing that renting is like tossing your money into a fire, while buying a house is the smartest investment you can make. But let's be real for a minute. It's not that simple when you buy a house. It's not just about comparing your mortgage to rent and calling it a date. There's a whole lot more to consider. For starters, the down payment isn't pocket change. We're talking tens of thousands of dollars, sometimes even more depending on the price of the home. And then there's the interest on your mortgage, which will depend on the current rates. And don't forget about mortgage insurance premiums. If you're going to be putting down less than 20%, this is going to cost between 2.8 to 4% of the mortgage. That's another significant chunk of change out the window. But hold on, there's more. Property taxes aren't cheap. You'll need to add in insurance costs, and don't forget to stash away some cash for repairs and maintenance, because trust me, things always come up and there will always be changes you'll want to make. All these extra costs add up big time, making the dream of home ownership quite pricey. Now what about renting? It's pretty straightforward. The rent you see is what you pay. So when compared straight up at $1 versus $1 monthly cost, does renting a home cost less than it would to own one at an equivalent value? This may come as a surprise, but in most cities, yes. Renting can be way cheaper than buying, especially when interest rates are high. But wait, there's a twist. It's not quite that simple so far. We've only considered the short-term financial costs, but what we haven't considered is the long-term investment opportunity. What do I mean by this? Well, when you're renting, you're essentially paying 100% interest because you're never going to see any of that money again. Whereas when you own, your mortgage payment goes partially towards interest and partially towards principal. The interest portion is just like rent and you'll never see it again. But the principal portion is the amount that you're paying down the mortgage, and one of the ways that you build equity. And what is equity? Well, it's the difference between the value of the home and the remaining mortgage balance. For instance, if you bought the home for $500,000, put a $100,000 down payment when you originally purchased it, and you've now paid down $50,000 with the principal, you would have $150,000 in home equity. But you probably heard me say, this is just one of the ways to build home equity. So what are the other ways? Another way is through passive appreciation. Or more simply, put home value as going up due to market conditions. We call this passive because without doing anything literally, just by living in your home, its value has gone up now. What if you were to do something actively to increase its value? Well, this is called active appreciation and can be done in many ways, but the most common would be through renovation. The goal here would be to increase the value of your property by more than the amount of money you put into it. One way of doing this is through what we call sweat equity, which essentially is doing the renovations yourself in order to save on the cost of hiring it out. This isn't required and likely isn't the best option for everybody, but can help reduce your costs along the way. But if you're handy or have people you know that are willing to help, this can be a great way to build additional equity. Keep in mind that the market doesn't always go up, so this can work in the other direction as well. However, over the long run, real estate prices have always increased, and I expect them to continue to do so. So it's important to have a long-term plan when you purchase. Which brings us on to our next point. If you're not planning to stay in your home for more than 3 to 5 years, renting might actually be the smarter financial move. The shorter time that you're in your home, the greater the risk that prices have not appreciated. There's an old saying that goes, it's about time in the market, not timing the market. And this is something to live by. The longer you own and are in the market, the lower your risk is and the greater the likelihood your property has appreciated by more. In the past 40 years or so, we've seen an average annual price appreciation of around 7%, with home prices doubling every 10 years. Now, that's not to say that history will repeat itself, but the trend has been pretty consistent. That doesn't mean every year you can expect your home price to increase by 7%, as some years it could be up by 15%, and other years it could be down by 10%. But over the long run, when you average it all out, that's what we've seen. Up until this point in time, the real estate market goes up and down upwards. The way I best like to describe it is, it's like a yo-yo on an escalator. It moves up and down in the short term, but always upwards in the long run. But let's assume you do see some price appreciation over the short term. Or at worst, your property's value stays the same. It would still make more sense to buy rather than rent, wouldn't it? Even if there was no gain in value, you'd still be paying down some of the principal on the mortgage. Well, not so fast. What you need to keep in mind is that there are significant costs involved with both the purchase and the sale of a property. So even if your property is appreciated, you need to consider how these costs will impact the overall numbers more often than not. It doesn't make sense over the shorter time spans of 1 to 2 years. So far, we focused almost solely on the financial aspect. But there's more to where you live than just the numbers. Owning a home has its perks like stability and the freedom to do what you want with the place. There's no risk of being evicted or having to worry about your landlord increasing your rent. You don't need to ask permission to paint the walls or turn the backyard into a putting green. You have full control over whatever you want to do. However, with great power comes great responsibility on the flip side. Renting gives you the flexibility and less financial stress up front. You won't have to worry about the costs of fixing up the place or the headache of selling it if you decide to move. You can basically pick up and leave whenever given that you've provided a proper amount of notice. Of course, you don't have to worry about fluctuating interest rates or the market going down. Exactly what you have to pay on a monthly basis, and in many provinces that can only be changed annually and by a very small amount. So what's the bottom line? If you're not staying put for the long haul, renting might just be your best bet, but if you're all about laying down roots and make it a place of your own, buying could be the way to go. It's all about what fits your life and your financial situation best. If you made it this, thanks for sticking around. And if you'd like to continue this conversation and come up with some tailored advice based on your unique situation, you can scroll down and click the first link in the description to book a call with me at a time that works best for you. Make sure you check out the links below for more info and tools to help you make the best decision. And before you get out of here, make sure you check out the next video in this series on what the down payment requirements are for purchasing a home. Be sure to leave a comment if you have any questions, and otherwise we'll see you in the next one.